Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
So spreads can help mitigate your volatility risk. If you're uncertain on volatility but you have a price forecast, well, I just went through it. You want to use debit spreads to defray your total premium, or you could use credit spreads to limit your overall risk. Since you're buying one option, you're selling another, you're mitigating that vol risk. If you're bullish on volatility but you're uncertain on direction, well, if you're bullish on volatility, you're probably going to want to be a buyer of both calls and puts. But again, so you have no view on the underlying asset. You think that volatility is going up or down. There you go. Well, you might buy a call or a put. But if it doesn't move, or even if it, in the case of the U.S. dollar Canadian, maybe you made a 3-point move, but if you bought the straddle, you probably paid well in excess of 3 to get that straddle on. You probably would still be a loser, at least as of me actually, as of this moment. So to summarize what I spent the last hour on, option premiums are based upon the market's uncertainty, or their view of uncertainty. The greater the uncertainty, the greater the option premium. So I hope that just summarizes the last hour. Different types of volatility, many different types. Most oftenly mentioned are the implied volatility and the historic volatility. Implied volatility measures the market's expectations. Spreads can mitigate not only the time decay risk of options, but also reduce the volatility risk as measured by Vega. Volatility changes each and every day. There are many option strategies that take advantage of your view of the FX market volatility. So I could do long vol positions. Of course, they haven't been working out very well since volatility has been going down, but just remember that they're available, straddles and strangles. Short vol, you could actually sell call spreads and put spreads. And neutral vol might be vertical spreads. Investors/traders should always consider not only the rewards of any strategy, but the worst case scenario. And that allows you to have a better follow-up plan. I would urge you to continue to go to FX options. Soon we're going to have these skew charts available. And TJ asked me a question about a doc on these skew charts. We will try to ask Live Vol for some sort of document on that, TJ. So I'd urge you to, what you can do is go to the internet, go and read some white papers on skew and skew charts. And then you'll probably, once you start to get these skew charts, they're going to be free, which is amazing because let me tell you, when I was a trader on the floor, I would have died for these skew charts. We used to do this by hand. It was so laborious. Now you'll be able to go to the fxoptions.com, get these skew charts. This should happen in the next couple of weeks to a month or so, where we'll have the skew charts available. They'll only be available for the FX options market, though. I mean, if you want them for all securities, you could sign up, and I'd urge you to do this at livevolpro.com. They have a great offering there. Let me go back to FX options, and now I want to open it up for questions. Any questions you might have, please type them in the chat box. I want to thank all of you for attending. For those of you who have to drop off, thanks for attending. And again, we'll be back with another webinar real soon. So that'll be next Tuesday. But please, any questions you might have, just type them in the chat box. Here's a question. Question is, Steve, you've made it seem pretty simple as far as the trends in volatility. Is it that easy? Well, in retrospect, anything is easy, right? But what I'm trying to say is that you have to have a view. So if you have a view, if you have a much stronger view on the asset value, where it's going, and you don't have a strong view on volatility, well, what should you consider? Spreads. You should consider vertical spreading. Now, if you really want to have that sort of that home run approach, where you're buying an option for 2 and you're going to want to try to make an unlimited amount of money, well, that's sort of the home run. As I said, it's a home run style, and that is much riskier. So if you're interested in more moderate trading strategy, please consider vertical spreads. They help mitigate volatility risk. Great question. Let's see if there are any other questions. I'm going to give everybody another 30 seconds. I want to thank you all for attending. I gave you a lot of information today, so please go back. Oh, great. John, thank you. He says it was really good. Good. Got some questions here. TJ says, is it tougher to make a profit and get out of spreads quickly? Believe it or not, I wouldn't say quickly, TJ, but your spreads are going to get, your orders for spreads are going to get filled easier. Why? Because the market makers are more willing to fill a spread order than they are a single-legged order. So you might want to think about that. When you're trading spreads, I can't say that it's better in short term. In fact, it might not be, because the maximum profit you could earn on a spread will only be earned at expiration. So when I showed you that $6 vertical for $4.71, well, you'd make $1.29 on that trade, but at expiration. So if I knew that the U.S. dollar Canadian was going to go up for certain tomorrow, was going to move up 4% or 5%, the best trade might be just buying a call, or if it's going to drop 5%, it would be buying a put. But if I'm not that certain, which again, 95% of the time I'm not that, 99% of the time not that certain, a spread might be a better trade. All right, let's see if I can take another one. Hope that answers your question, TJ.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.